This program is brought to you by MYOB, Easy Online Accounting.
Well, June 30 also brings tax changes, an extension of the instant asset write-offs and of the middle and low income offset that could see individuals $1,080 better off. But look, mini tax time also brings sensitivity. In particular, areas the tax office will target where it sees constant mistakes in returns or indeed potential rorting or overclaiming. The Australian Tax Office Assistant Commissioner Tim Lowe joins me from Melbourne now. Tim, many thanks for your time.
Thanks, Ross. Thanks for having me today.
Look, one of the things is that Australians claim in work-related expenses around $19.4 billion in the last financial year that we can go back to. 8.5 million of those. There's 3.4 million Australians that claim some sort of a tax break on their cars. There's, sort of now working from home. So it's a fairly complex area. Do you think that people deliberately get it wrong, or do you think it's actually a case where some people are taking the mickey here?
Look, I think it's a mixture of both. I think a lot of people do make genuine mistakes, and we're here to help them at the ATO. And there are people who do take the mickey out of the system. So, for those types of people, we do take firmer action with those people.
Okay, so when you're going through at the end of any tax year, there's always, we're targeting this area. It might be that, that there's been a big increase in house prices. So you'll be looking at capital gains tax on properties, for example, or it might be that, that business has had some breaks. And I mean, the instant asset write-off is one of those that has been extended into this year. So, how does the tax office assess as to which areas it's going to focus on in any given financial year?
Yeah, we use data analytics to do a lot of that analysis, Ross. So for this year, we're focused on work-related expenses, including working from home expenses. I guess with work-related expenses, we do expect car and travel expenses to go down given border restrictions, but we also do expect working from home expenses to go up. Look, another area that we're focused on is income and deductions from rental properties, and we're also focused on capital gains tax, so on shares, property and cryptocurrency.
And cryptocurrency is one. We've mentioned this before on the program, and that is that a lot of people imagine, oh, well, I'm dealing in currency, there's no tax implications here, but of course there are. And the second part about this is that the tax office does have, if you like, the powers of observation to be able to look at those transactions much more closely than many people might realise.
That's right, Ross. We've got data matching protocols with the cryptocurrency exchanges, and they share that information with us. We cross-match that with information that we've got here at the ATO to follow the money trail back to taxpayers to make sure that they're complying with their tax obligations in relation to their cryptocurrency.
And the final part about that is that if you've made a profit out of a cryptocurrency, as anything, that you are subject to either capital gains tax or indeed, if you're a trader, a professional trader, it goes onto your income.
That's right. So if you are an investor in cryptocurrency and you have held the cryptocurrency for at least 12 months, you can get a capital gains tax discount.
So then take me back to something you mentioned a little earlier, and that was working from home. Given coronavirus and the lockdowns that Australians have experienced, there are more Australians than ever before working from home. Now, that means that they have certain entitlements, but also there's new ways in which that can be calculated. So there's actually almost a price, a break per hour that a person can get for working from home if they wish to do it that way. Otherwise, if they want to go to more complex reasons to claim more, they've got to keep diaries, they've actually got to keep better records.
That's exactly right, Ross. So this year we've extended the temporary shortcut method. It works like this. All you need to do is work out the number of hours you work from home, multiply that by 80 cents per hour, and that is your deduction for all your working from home expenses. It's a really easy and simple method, but as you alluded to before, there are two existing methods that you can use as an alternative to that particular method. They're a lot more complicated. You need really good records, and you need to work out what the work-related portion is as well.
Okay, so there's one thing that I've always known about, and that is if a person had said they have a home office and that takes up, let's say, 20% of my house, is there any danger now that if I sell that house that I might be subject to capital gains tax on that proportion of the family home?
Yeah, look, that is always a risk. So if you're using one of the existing methods and you're looking to say, for example, claim occupancy costs, there can be some capital gains tax consequences coming out of that. But if you are using the temporary shortcut method, there's nothing to worry about there.
I'll tell you what, it is good to see you. This is going to be interesting, Tim. Is it a good time for tax officers right now? I mean, obviously a lot of this stuff's done electronically now, but you do have people that go out into the field. I mean, you know, it really is a case where the more information you've got, the better it is in terms of being able to claim the right amount of tax from the people.
Yeah, look, I think from our perspective, we want Aussies to get the deductions they're entitled to, nothing more, nothing less. So it's really important from our perspective to make sure we're out there telling people, you know, what they can and can't claim. We've got some fantastic occupation guides on our website, which can really help people work out what they can and can't claim this tax time.
Yeah, Tim Lowe from the Tax Office, thank you so much for your time today. Appreciate it very much. And we'll see you very, very shortly.